Sorry.
Good morning, good evening, and good afternoon, everybody. Welcome back to another episode of Scale School. We're late. Some say it might be a detention, but who knows? Today, very special guest, Mr. Stefano over from Nethermind. And as always, we have Professor Sawyer, the great Axios, in the building, who's going to be driving us through how privacy is important in the world of blockchain. Stefano, why don't you give us a little intro about yourself, my friend?
Yeah, hello everybody. Nice to be here on stage. Thank you for having me. So I can give you big background here. I'm Stefano. I'm a research scientist at Nethermind. And for those who don't know Nethermind, we are one of the first clients on Ethereum, execution clients. And we built close to Ethereum for a long time, mostly since the beginning. And now we are one of the main adopted clients out there. Of course, the company built a huge expertise in blockchain space. And this is not just around Ethereum, but we started building some knowledge from the engineering side and from the research side. Research is focused on different areas. We have a huge expertise around cryptography, protocol, and blockchain research. Personally, I am more on the consensus side and also on the applied cryptography, I would say.
Very nice.
We have been involved in many blockchain projects, and to be honest, we are looking into several areas. And what I'm mostly interested in today is, of course, privacy. So I'm super excited to be here and discuss about encryption.
100%. And Sawyer, you and I have been talking about encryption and so on and so forth. It is a massively important thing in the world of Web3. Talk to me about encryption, brother.
Yeah, I think it's interesting, right? I guess, first of all, for those of you that don't know me, my name's Sawyer, if this is your first time. And if it's your first time, start showing up to school. I know, right? That was a good one. I've been planning that one for weeks. Okay, anyways. I think privacy is really, really interesting because Web3 is so interesting. It moves in these circles, right? You see these waves of people talking about things. They get really popular, really hot, and then they just disappear. And so I feel like over the years, privacy has continued to be one of those things that gets really hot, and then it's like the ultimate pendulum swing in Web3. Right? Literally, we get people who are everything needs to be private. And then we get the same people who turn around and it feels like they're oh, I don't actually really need privacy. It's too expensive. There's too much legal risk. It's not here yet. It's not ready. Whatever it is, too confusing, bad UX. And so I think my first thought of the day is privacy is really interesting because it's definitely hot again. Obviously, we're seeing that with Zcash and stuff, not investment advice, but we're seeing that with people, privacy tokens are getting hot. And that's usually I want to say that when the tokens start to get hot these days, I feel like you're kind of at the end of the temporary meta, and it kind of shakes out a lot of people who are really just there trying to chase. And I think it's good because over the next few months, I think we're really going to see the teams shipping privacy double down. We're going to see a lot of network launches and product launches. I mean, Aztec is right around the corner. If not, they just launched. Zama is just announced a whole bunch of information, and they just hired a bunch of new people. And I know they're gearing up. They just announced pricing for how they're going to work across all the chains. So we're seeing all these new products, which is really cool. And I think it all leads back to one really important thing, which is your original question. Sorry for the ramble. Why do we need encryption? Why is privacy relevant here? And I think we're going to dive really deep into that today. But the first thing that I just want to say on that is it is a societal expectation. In today's world, in a digital society, which not everybody in the world is fortunate enough to necessarily be a part of, and I recognize that. But if you are living in a country that is advanced enough technically to be on devices 24/7, like we tend to be, privacy in certain areas is a societal expectation. You are private from your neighbors, you're private from your colleagues, you're private from different people and different entities at different times. You are not necessarily private from your internet service provider. You're not necessarily private from the people you're spending money with or the services you're consuming. You're not necessarily private from the government, but you're private from the people who are closest to you. And so I think that is the expectation of society. And I think encryption right now is all about how do we get Web3, how do we get crypto to that level, I think is like the 0 to 1 to solve right now for me.
Yeah, it's an expected, well, Connor said it, right? Expected level of privacy.
Commercial confidentiality or confidentially commercial.
Okay, we're going on different things.
No, it means the same thing. It's like at a business level, there's like an expected level of confidentiality. So privacy is the meta, right? Privacy is like the keyword here. But underneath that, you can describe privacy in a number of ways. We tend to conflate privacy versus confidentiality. They are actually slightly different in the sense of confidentiality exists, but how do I explain this better? Confidentiality is a simpler way to explain a level of privacy expected in what we're talking about, like with your neighbors, right? So commercially confidential, commercially confidential, whatever you want to call it, that just means that it passes the barista test. That's all it means, right? We'll dive into the barista test shortly.
Yeah, no, it's definitely interesting, and you know there are so many different aspects of privacy within Web3, which I think is super interesting, and Nethermind themselves are out here trying to position themselves and assist in that. So what's Nethermind been up to, and what you guys seeing in this kind of adoption for privacy features?
Yeah, thank you. So as I was saying before, Nethermind had this big expertise around blockchain and cryptography with a deep dive in privacy. And we have been looking into this for a while. And as Sawyer was saying, we are trying to see whether this need comes from the actual use cases in the real world. And for sure, we have noticed that institutional involvement around blockchains is one of the main drivers that bring the huge need of privacy in Web3. Maybe let me explain a bit more here. So, as I said, we are positioning ourselves as an expertise, as a company that has expertise in blockchain, and we want to help institutions to jump on board on this new infrastructure that can be used for many different use cases. And for sure, the main one that is most exciting to me is this kind of concept of a new infrastructure railway for digital finance, where you can bring on-chain on this new paradigm everything that is now moving on traditional Web2 infrastructures from financial services perspective. And why we are noticing institutions being interested in doing that? When I mention institutions, I mention, of course, different layers of institutions, for example, financial institutions. There are many interests there. And one of those is for sure having this kind of decentralized infrastructure that provide new opportunities for them. First of all, cost-wise, right? Because we have this concept of programmability of money that it wasn't possible to have before. And with programmability of money, what you can do, you can actually have new opportunities of building services that leverage, I don't know, market that is open 24/7, and remove intermediaries, because in payments, for example, or interactions between banks, you always have intermediaries for clearing and settlement of payments. While on blockchains, you have this new infrastructure in which you have programmability on top of it, and you can actually leverage this programmability to automate those processes. So it's a huge opportunity for institutions to jump on board. Of course, the problem comes from the underlying value of this infrastructure that is decentralized, which is actually what I like to call it the dilemma between transparency and confidentiality. Because blockchains provide by nature these properties of transparency. I'm talking about public blockchains right now. You have this audit trail of events or transactions that can happen between players that is immutable and can be auditable by everyone because it's public. And this is a future, and has been a future for a long time for us involved in this ecosystem. But when the institutions come, they said, okay, but we actually cannot have a public ledger where everyone can see our customers' transactions, our trading strategies, the sheet balances of our customers, but even the cash flows, right? It's something that they cannot make it publicly available. So the dilemma here is having financial services that work on these new rails, but retain some confidentiality that is required by financial institutions. So the big question here is, how can we take the best of the two worlds? How can we have a new infrastructure for financial services while retaining privacy and confidentiality for users over sensitive information? And this is the big question that I would say the big challenge that I would like to work on in the next future. And there are some also, we have noticed that there are many signals that this is something that this movement is coming into blockchain space from the institutions. We have noticed this exceptional interest around stable coins that exploded in the last year, I would say. And this relates to the concept of programmable money that I was mentioning before. There are other values we noticed around there. Tokenization is a big one. So asset funds, asset managers are started playing with tokenization, which is good. But there is also another very important signal that is bringing institutions on chain, which is regulation. In Europe, for example, there have been a lot of regulations or regulatory effort to touch these points. So I really believe that this is a huge thing, and we need privacy to bridge the gap between institutions and blockchains.
I fully agree. It's one of the things I'm hearing directly in a lot of the conversations these days is the interest in migrating or evolving to consume blockchain rails behind the scenes. It's faster, it's cheaper, it's more efficient. It reduces counterparty risk just due to the time that it takes to do T+1 block versus T+1 days or T+7 days. There's just so many benefits, but the problem is right now, if someone is doing an international wire transfer, the only people that see it are all the banks moving money via SWIFT, right? There is no public notice that entity A is moving money via all these other entities to get to entity B. And I think that is the crux of the issue right now, right? Is not just that it's public what you're moving and when, but it is a downstream effect of what are all your assets. And I think that honestly for people, I think is more concerning Like, I think a lot of people are like, oh, if I just have a transfer that's like $1 million for my business that's public and it goes from A to B, but no one knows who A to B are because they're just like temporary burner wallets, it's probably not the end of the world, right? Because it's really just like a proof that it happened. But the problem is if you send $1 million out of your account because you're paying out another business, right? But that wallet is linked to 1,000 other wallets, which then are linked to 1,000 other wallets each, which all have different assets and whatnot. We start to see this like doxing of business entity value, right? Which if you are a publicly traded company, you may not want that to happen because you have to carefully manage every piece of public information to ensure that you are compliant, right? And to ensure that you're not accidentally getting like sued by shareholders for sharing information that was not yet announced via public filings. And so there's just like all sorts of downstream information that I feel like gets impacted here. And so, yeah, I agree with you fully. I think we need to be building, like I said, in this direction of like, maybe the long-term future, we want to see this like fully private world. And I think that's an ideal for a lot of people, right? Like, would it be nice? Absolutely. But I think in reality, the 0 to 1 that moves the needle for the blockchain industry right now is private money movement in a compliant form, right? Yep. If the businesses can move that on chain, we're going to see so much money pour on chain that everyone that's been trying to make this happen for the last 10 years is going to be, there's not going to be any complaints about it, I don't think.
Yeah, I actually saw a tweet today that was talking about how in 2014, like a guy got, I think it was in Paris, got, robbed for like $4.8 million worth of his crypto. And, those are the type of things that we have to go and say, hey, we need privacy, right? To be able to stop bad actors like this from happening. And I think that kind of goes to the barista comment, right?
I think so. And I guess just to remind everyone that maybe wasn't here in some of our past conversations, what is the barista test? It's kind of like how we used to do the grandma test for user experience, right? If like your grandma could use the app, it was good. If she couldn't use the app, it was bad. We use the barista test for privacy. I don't know if this is going to be something that gets adopted by the wider world of privacy, but I think it should because it's really great. And I give full credit to Connor here because I stole this from him multiple times. The barista test is simple. When I go to buy a cup of coffee from a coffee shop, the barista takes my payment. The barista has the ability to see maybe a little bit of information about me, right? They can see my name. Maybe they can see like the last 4 digits of my credit card. They can maybe see what my credit card company is, whatever it may be, right? They see like very basic information, but the barista cannot look downstream and see into my bank account. They cannot look downstream and see how much debt I'm carrying on my credit card. They cannot look downstream and see all of the outstanding like loans I have. They cannot look downstream and see all of the payments I've made over history, except for maybe the ones locally at that business, right? Like maybe it pulls up my profile and they can see, oh, I've gone in and gotten, a double shot of espresso every day for the last 6 months. But they can't get past their siloed information. That is what the barista test is, right? And that comes all the way back to this idea of like, we want it to be private enough. That is the societal expectation, is private enough to pass this barista test, where the barista can see enough information to get the job done. The bank has enough information to get the job done. The credit card company has enough information to get the job done, but you don't have to give away everything about you to facilitate that payment.
What do you think, Stefano?
Yeah, that's exactly what we were discussing before about having this layered privacy in which you actually disclose only the minimum amount of information to get your transaction go through. In this case, the payment. I think it's very nice. Probably this also relates to something we have been noticing recently in the space, which is about the problem of public data availability layers we have out there. And let me explain why. So with rollups in general, with this concept of offloading computation from a blockchain to an external layer, you're actually offloading the data of transactions, and the volume of what is going on in terms of transactions is managed off chain. When I say off chain, it means outside from the layer one. We have this rollups concept in which you have an execution environment that provides the execution of transactions, and then submit some kind of commitment to a new state update. And you want this commitment kind of to be verified on the layer one. There are different approaches, like we're not talking about differences in rollups, but my point is that the data of those transactions is also important to be available for further verification. And here we have the problem of data availability, in which rollups have to make their data available. And today they are using what is called public DAs. So data layers, one for example, can be Ethereum itself, in which rollups publish transactions data of those volumes that are happening off chain. And this is public, so everyone can actually see what's going on the rollup in terms of transactions. And this is perfectly fine if you are happy with publicly visible transactions. So there is no level of privacy that can be guaranteed here unless your rollups by design provides privacy. For example, you guys were mentioning Aztec before. If you are running this kind of privacy preserving rollup, in which everything is obfuscated on the client side, then of course, even though you use a public DA, everything is private. But one important property of DA is that you want to also provide availability. So you want to make sure that when you publish something on the DA, then someone else in the future can verify the availability and use this data to verify also the correctness of the rollup. Now, what if we want to embed privacy here? So again, for fully private rollups is fine. So you have this fully private environment, but it's not auditable. So from an external observer, you just see encrypted data on the DA. You cannot actually verify that about the validity or the compliance of this data. What if I want to provide some statements about the data, or I don't know, provide some compliance about the volume, the transactions on the rollups are all managed by KYC account or authorized accounts, or people that are have been verified by a certain entity. You cannot do that if everything is private. So you can provide something that is nowadays explored by Celestia as well, which is called verifiable encryption, in which you have this public DA that everyone can observe, but then the information that you store on the DA is encrypted, but it comes with some verifiability, some properties of verifiability. So you can actually prove that the data is stored on a public DA, so it's available, so everyone can actually verify that the data is there, but nobody can see it. And nobody can see it, but you want to include this bit of verifiability using some kind of proof system or verifiability system. And this is very interesting because in this case, you have a concept that can be seen as a programmable private DA, in which your DA is private. You retain the availability properties because the DA layer is public, even though the information is private. But then you can enforce some rules that can be verified, even though the data is indeed private. For example, you can have a zero-knowledge proof that provides information about the encrypted data that you're storing there.
Okay, so this is interesting. This, I feel like, so this is very relevant for example, like if we have a layer 2 blockchain that wants to say you've got a layer 2 blockchain, it's highly focused on payments, but the payments themselves on the chain are encrypted, right? They're using FHE or ZK or something like that to actually have those transfers be encrypted. The problem is the data needs to get rolled up and pushed, but we still need to be able to prove the data is legitimate, right? Like if we need to have a fraud proof or we need to have some sort of way to prove that it is invalid, we can't do that on private data. So we need to somehow bridge the private data to a public proof. Am I kind of summing that up correctly? Okay. So go ahead.
Yeah, this is correct. But what is interesting is also the fact that if you want to prove this to an external auditor because you want to make sure that the data you are publishing is compliant with certain rules or payment rules, then you need this bit of verifiability on the data that you are publishing that is encrypted.
Right.
I think it's
that makes sense.
I think this is crucial for compliance. So if you have a rollup that wants to be compliant with some regulatory rules.
Yeah, I guess one question would be, are we going out of our way? Like, are we overcomplicating it because I guess a way to phrase this would be, would it be easier to add, like I know Ethereum is on a ZK kick, right? They want to do ZK proving for the entire chain. Is it potentially easier here to do like some sort of privacy mechanism at the L1 level that L2s tap into instead of vice versa? So it feels like if we're doing this with like a Celestia controls what, like less than 1% of the DA. So isn't it kind of like, in theory, it's a good idea, but in practice, it kind of feels like we're solving a problem for no one. Because if they make Ethereum like 1,000x more scalable and Ethereum controls 99% of the DA, doesn't it make more sense to make this like an EVM L1 primitive where, like, wouldn't that be a simpler direction to target that solves the problem for more people?
Yeah, so definitely scaling the L1 would be the best option here. But I see this as two different problems. Like the concept of private or public DA is something that we are facing today, because today in today's infrastructure we do have the need of rollups because the L1 is not scaling well. So we do have rollups and institutions that want to run on. So if you think about institutions or payment systems and you want to provide a service that is comparable to traditional Web2 services, you have to create your own rollup today.
Right. So let me ask you a question. So we have the ability within SKALE, SKALE shell number 1 of the day, we have this thing called Byte Protocol. Byte Protocol stands for Blockchain Integrated Threshold Encryption. For those of you that are not familiar with threshold encryption, I am not a cryptographer, but the way that I like to explain it is essentially multi-party encryption where you need a majority of people to do some action. Okay, so what that means is, for example, we have 3 people on this live stream. We can have a threshold scheme that uses SKALE's consensus, which basically says we're going to generate a shared public key. And to do that, Falcor, Stefano, and myself, we're each going to generate a share of a private key. Okay? So that means we each have a secret. I have a secret, Stefano's a secret, Falcor's a secret. If any 2 of us come together and use our secrets to prove some data, that data can be made whole. Okay? And that is quite literally how SKALE works. That's why you have Byzantine fault-tolerant consensus, is you don't need 100% of the validators to agree, you need the supermajority. In this case, the supermajority is greater than or equal to 2/3, right? Or greater than 2/3, which is, well, 2 of us. And so what this means, what's really interesting, is we have within Byte, we have these different phases. And in these phases, we have the ability to not just encrypt transaction data, we can keep data encrypted and we can re-encrypt it. And so I have a proposal that might be interesting to you, Stefano, and to anybody listening that is a privacy maxi interested in rolling up. We have the ability to take data, encrypt it, and store it on chain. We also have the ability to take that data and make it where only specific people can decrypt it. We can do that already using our multi-party threshold encryption. And so functionally, what they're attempting to do with this DA layer, we can already do on a normal blockchain. And we can do this with zero gas fees. So technically, if you're a roll-up today and you want to roll up private data and make that available to an auditor, technically, wouldn't this be a viable solution to use right now? Because we can let them roll up the data for super cheap. It would be stored encrypted. And then if they need to let an auditor look at it, they could re-encrypt the data with an auditor's public key. So that way only the auditor could decrypt it locally and then consume it how they need to for the audit.
Conceptually, yes, I would say this is something that can be useful. But I would do the devil advocate here. And what makes difference is the trust model. And who is running this infrastructure where the data is stored and maintained is crucial. And that's the difference I see from what you just described and other solutions like Ethereum, DA, or even Celestia. Let me explain. You have this great technology, which you have a set of validators that are running on threshold encryption scheme, and they can actually store data, encrypt the data, and provide this functionality of decrypting the data to allow to authorize people, which is great. But you are actually trusting the underlying set of validators that are running the infrastructure, right? Mm-hmm. So the trust model there is, I assume that the SKALE network I'm using will give, like the validators that are running the SKALE network are 2/3 of them remain uncompromised. They are not a Byzantine, which is a reasonable assumption. So everything is like a trade-off between code. I can use this infrastructure. I have to trust this set of people, but it's just, I don't pay a fee, right? There's a different fee mechanism model. So if from the end user perspective, if I'm happy with that, I would go for it. Another option is to use a completely decentralized DA layer, like using Ethereum, and maybe because I would rather prefer native composability with Ethereum on my DA, and also because, I don't know, I feel more confident with the trust assumptions on a DA that is running on a validator set of 1 million validators. Right,
but I mean, Ethereum's validator set is functionally run by 3 entities. It is Lido, Binance, and Coinbase. They control greater than, I think it's like 60 to 70% combined across the board. So functionally, the trust assumption is arguably almost the same. And we could actually turn around and say, okay, if we're doing this for private payments, we could get a consortium of 10 banks to run the blockchain, and you are trusting 10 banks to handle your money. So I feel like I understand where you're coming from, and I do think that the argument of more validators is valid in a case of a world where you don't care about the underlying entities. But I think if you're an enterprise, you have to be cognizant that by trusting Ethereum today, you are trusting functionally a very small set of entities who are controlling a substantial portion of the consensus.
Yeah,
so that's another trust assumption trade-off.
Yeah, I think this is probably an artifact from proof of stake mechanism in general.
Of course.
But I'm pretty confident that Ethereum is mitigating this with the consolidation upgrades. So there are some mitigation.
Yeah, but that still has the same problem though, because even if all the validators consolidated from 32 Ethanode to 2048 Ethanode, you still have the same n number of validators percentage-wise.
Yeah.
Your ratio doesn't change. So all I'm saying is, I think the reason I bring this up is because we talk about in the enterprise world, right? It's all about, can we solve that problem? And so I think the question here is, if we have people who want to do this today, which we know there are, because we're talking to a lot of them. The question is, if they're looking for a roll-up where they want to control their own money, but they still want to have a proof back to a broader public chain, it seems like we have an opportunity to potentially solve that for them today instead of trying to prove out some really complex technical product, because that would arguably be the difference with like a byte protocol or with like a Zama FHE, right? These are primitives that get built in or on top of existing blockchains. They don't require somebody to go and spin up an entirely new DA layer, if that makes sense.
Well, yeah, but what you're proposing is also setting up a new DA layer, right?
Yes, but the difference is there's already money on the DA layer. So like, because it is an underlying blockchain. So the difference is like when you're using like a Celestia, right? You're rolling up your data, but where's the value getting accrued from? Like there is no value on Celestia. They still pull the value from somewhere else, right? So like they're just splitting off only DA. They're using these like complex modular stacks, which ultimately make it more complex for an enterprise to actually get involved. Because now you're making them choose things that they don't know anything about. So all I'm saying is, I think the argument that Ethereum is the best for this is probably one of the most valid out there, because you have everything you need on Ethereum. You've got the best DA layer from a number of validator perspective, and you've got the biggest liquidity base. So arguably, if you have a secondary liquidity base that you can just drop encryption into and solve this, if you are an L2 that wants to spin up purely for payments, I'm just making the counter argument that it would make sense to say that's an easier switch than switching to a custom DA layer that has nothing on it. It's just like an empty DA layer. It's easier to just build everything on one place because the whole modular stack in theory sounds great, but for an enterprise, the simpler the better.
Yes, I see where you come from. It would be interesting to do like an experiment and see where are the limits in terms of throughput of this thing, because one of the big issues when we talk about DA is we want capacity. So to scale DA, we want larger blobs, larger blocks. We want to store more data, because Definitely. in this sense we can scale the number of parallel applications, but either vertically and horizontally. So you can Definitely. Increase the number of rollups and increase the volume on each rollup.
Definitely.
But yeah, so if we are talking about enterprises and financial institutions, hopefully the volume is huge, is enormous. So you want to make sure that this DA that you're proposing can cope with the requirements, and is not a bottleneck. Definitely. Because when we bridge financial services to blockchains, we want to retain the same performances that we have today, ideally on Web2, but with better security guarantees and with better efficiency.
Definitely, I'm fully aligned with you there. Let's chat more about this offline. I think it might be fun to do a little experiment, because I think we could try something cool.
Yeah, sure.
Awesome. Love me a little bit of a discussion. We've got 10 minutes left, and I really want us to look at hitting on, how can we're in this massive age now of AI agents, DeFi, continuing to keep pushing up, and I'm sure, when traders have their secret sauce, they want to keep it secret, So how does privacy for DeFi really mean in practice? And what DeFi functionalities are going to really benefit most from these encrypted workflows?
It's a deep question.
Yeah,
Stefan, I'll let you go first.
Yeah, I will go first. So we touched DeFi and agents. I think we discussed a lot about payments. So let me give you my position here. So for DeFi, it's crucial to have privacy for many reasons. First of all, as a user, as a DeFi user, I do want to disclose when I interact with the DeFi protocol. I don't want to disclose my positions or my strategies, DeFi strategies. So I really don't want to disclose, for example, what's my liquidation threshold, for example, for a leverage position. And it would be very nice to have everything obfuscated and make it private. Because, everything is about competition with others. So I think it's a better user experience from a user perspective, having these kind of features. Something that is really nice as well, talking about strategies, it would be to have, I don't know, if I publish some limit orders on a DeFi protocol, I don't want these orders to be published public as well, because people can front run. And this is actually minimizing the advantage of DeFi. Or it's kind of a MVP thing in which people can look at my positions and my limit orders and then can front run me. So.
Definitely. I agree with you. I think it always boils down back to privacy, of course. But I think it's the application of privacy in this case is a little bit different, right? In this case, it's not I care about people seeing how much I have. This is I don't want people to see the action I want to take. And that sets us up for a really interesting question of, well, how do we solve this, right? And I think there's two questions. One, how do we solve this? And two, do we see a actual adoption of the technology, right? Do we see more people trading on chain if we solve this? And I think the answer for a lot of people seems to be yes. I don't know if that will actually play out. I think there's a greater chance that a lot of this actually occurs through delegation, AKA I'm not a trader. I'm a buy and hold kind of guy. If I buy it, I'm probably never going to touch it again. And I just hope that it, goes to $1 bajillion. But I'm probably never going to actively trade because I've tried it. And I was really bad at it because I don't know what I'm doing. And so I think this is a great example of, we do live in this world where AI is growing like crazy, right? People are asking ChatGPT everything, right? It's like, ChatGPT, please run my life. And so we're talking with a ton of teams building agentic trading applications, everything from wallets to perp dexes to lending managers. And it's really interesting because I think we are going to see on the AI side, we're going to see two things. One, we're going to see and continue to see this explosion of agentic trading agents, which a lot of them are going to be really bad and useless. And then there's going to be some diamonds in the rough. And then we're going to see the second wave, which is actually the consumer phase, which is someone gets smart and just builds an aggregator and realizes that everyone just wants to ask ChatGPT to do something. You put money in, you say, hey, go do this. And then it uses 10,000 agents behind the scenes to go take the best position. You don't actually care how it does it. So I think there's a couple phases there that we have to get through to make it really usable. But in order to actually make that valuable, the agents, I think, need the same level of privacy that Stefano, you're saying you want. Right? I don't want to go trade perps personally. I have no interest because, again, I tried it and I got crushed. Did it literally one time and I hated it. I was so stressed out. Couldn't do anything. I just wanted to stare at it and watch the number go up and down, right? I'd love to be able to be hey, here's a couple $100. I think this is going to happen, but go double check some sentiment analysis, go look at some different things. And figure out how to manage this position for me and make sure I don't get wiped out. And if you can make a little bit of money, great, right? It just goes and does it. The problem is if you are taking long and short positions via a perp dex, it's very common, as I've learned, that people that are doing that big are hedging elsewhere. they're taking a long position on one place and they're selling spot, right, or vice versa. They're doing all these different things and making money across the board or potentially losing money. And I think it's important that when you think about doing this, that's a great example of a limit order, right? I might have something where I'm taking a long position on Bitcoin and I'm saying, hey, if the price of Bitcoin drops below 90,000, I want you to sell, right? Or I want to sell. Now the agent's taking that for you, or I'm doing it manually, one or the other, but the same principle applies. If everyone sees that everyone's going to sell out at 90,000, well, the people that are short sellers have an advantage because they just come in and front run you because they know when you're going to sell. They'll sell at 90,500, then they'll buy back in at 89,900, right? And they'll make the premium between. And so the reason I'm giving this deep example, I know I don't usually talk trading that much, is this is something that we actually just put a proposal out on our forum for. This is something that we actually have inside of Byte Protocol. It's called conditional transactions. And what it means is the ability to say, when this thing happens, do this encrypted thing. That's all it means. You can use that in so many ways. You can use that to say, when Bitcoin hits 90,000, do this. People can see that when Bitcoin hits 90,000, a bunch of stuff is going to happen, but they don't know what that stuff is. And that's the important part, right? It actually, I think, makes it more fun because you get these like big anticipation events. But it also means that you can go cross DApp now, right? So it could be, hey, if the Poly market for Gemini 3 being launched this week goes over 80 cents, I want to sell my position and I want to buy puts on, I want to short Bitcoin, right? Because I mean, I don't know, AI is weird. When good AI stuff happens, everything just like goes haywire. So that's a good example from this week, right? If someone did that, they would have made a lot of money probably. And so the cool part is we can actually do that with Byte Protocol, right? It opens up the door where these asks for privacy are actually possible right now. We can do these live on a Scale chain. We can actually let people build these, use these native primitives to the blockchain and build these applications, which is my Scale show number 2 of the day. And I'm very proud of that one because Stefano set me up beautifully for that. But I think the more important part is there's many ways to attain this level of privacy. I think what's really interesting is right now we have these massive trade-offs, right? And Stefano, you know these better than I do. Things like threshold encryption and threshold decryption are very slow, very painful, right? Just like FHE is generally has been very slow, very costly, right? ZK proofs, very expensive. And so we have all these trade-offs. And I'm just curious from your perspective, from working with so many teams building across this applied privacy space, what do you think is the most realistic to hit production first? Is it going to be like Zama FHE? Is it going to be Aztec Network fully like ZK L2? Is it going to be like privacy Zcash on Solana? Is it going to be potentially like a trusted execution threshold scheme with like a Byte Protocol and Scale? What do you kind of see being like the first mover here that actually gets people using this and not just being like private centralized dark pools?
Yeah. The technologies you mentioned are all very interesting for privacy, like the foundational technologies, I would say, but all of them hit some computation limits. And again, it's always about trade-offs. So there is not a definitive answer on which one will be used more. It's more like where the trade-off is to use it. We can have threshold encryption between small parties and has a very efficient mechanism that provides us some privacy guarantees because, you know, we are running threshold encryption across not many parties, or maybe because the hardware of every single party that is participating in the committee of the threshold encryption scheme is super high, so they can do it, the computation required quickly. For sure, zero knowledge proofs are I think we have seen a huge improvement in the space in the past year. So we are very close to have like real-time proving, which is great, I believe. And I really believe that zero-knowledge proofs will be user-friendly very soon. When I say user-friendly, it's not just from the user perspective, but also from the developer's perspective. I would really expect that people will start using zero-knowledge proofs super efficiently. And proving is something that unlocks privacy in many use cases. So we have seen it on AdStack, for example. And I really believe that this is something that works. But there are many use cases, not just about AdStack. We have been using zero-knowledge proofs on chain for a long time. We have cases like Zcash, like, I don't know, Tornado Cash. These are all using kind of flavors of zero-knowledge proofs, but also rollups. And now is a matter of improving the proof systems, but also on the protocol side. How do we find improvements on the protocol side to make these primitives accessible? The more fascinating, I would say, technology, in my opinion, is FEG, because running computation over encrypted data is something that is very interesting. You can have you can offload whatever computation you want to an untrusted server out there and ask them to compute over your encrypted data, so you're not disclosing anything. But FEG is quite far as far as I know, it's far from being practical in real use cases. It will be very nice to have it in the future. I think we will have it. And then what I found it very fascinating is combination of these technologies. For example, you can combine zero-knowledge proofs for FEG to make it verifiable, and having, I don't know, a cloud service that is providing computation over encrypted data, and then, or maybe running some machine learning model and doing some inference, and you want to make it verifiable. So users can provide inputs as encrypted data, and then the server will do the computation with FEG and provide you also proof that the computation was done correctly. Imagine for a medical use case in which you send your medical data to this server, and then you get on your smartphone the result and verify a proof that the result was done correctly. But this is not something that I see in the near future. For if you ask me about my sense on what is more practical, I would say that trusted encryption has been around for a long time. So I feel very confident with the technology, and we have seen zero-knowledge proofs like established technology for privacy these days.
Makes sense. Yeah, I just to kind of close that out, I was very fortunate to get to go to a private event at Google's offices, I don't know, 3-4 months ago. And there was all these world-class, 2 months ago, I don't know, time blurs in the space. It was with all these like world-class cryptographers and security researchers and ZK guys. It was incredible. And they, this guy, Abi, who was the individual who implemented ZK identity into Google Wallet, was doing a panel fireside chat with Dan Bonet, who's like one of the world's most well-known cryptographers. And he said something that I thought was just so interesting, which was like, for a long time, cryptography and ZK was a very had to be perfect type of thing. It was like very scientific in how people, very scientifically methodical, right? Like if it wasn't perfect, it didn't really get tried. And it sounds like there's just been a massive shift over the last few years in applied cryptography, where people are no longer trying to make sure that things are fully proven. It's kind of like, hey, if it kind of works, let's go try it. And it has led to this world of like really interesting, obviously, prototypes But that all then led to him basically saying, there's a lot of questions about keys and threshold cryptography and people saying, oh, it's not good enough. And his response was, it's the only thing that works in production really well for almost everything right now. So if it gets you to market, go use it. And using that as my closing thought of the day, because if you are trying to build something in the privacy space right now, whether it's a dApp, a rollup, a chain, whatever it is, Byte protocol is built. It works. It's here. ZK, FHE, I agree. I think there's going to be massive upside to them in the technology. And I'm very excited to see where they go. But the key is if you're trying to get to market right now, we have technology that is available to start consuming. So would love to have you come build with us and work, with our amazing collaborations with people like Stefano from Nethermind to see how we can all help push this privacy and encryption ideal forward.
100%. Let's do it. Stefano, thank you so much for hanging out with us today. Been a pleasure. Sawyer, as always, thank you for teaching us many, many things. And thank you everyone for tuning in and viewing and learning more about encryption. All right, guys, we will see you again next week for another episode of Scale School. Bye-bye.
Thanks, everyone. Thanks, Stefano.
Thank you. Bye.